Hello, this is Andrew Palladino here, and I'll be going through a quick tutorial on the EFC Tradingview Strategy. The basis behind the strategy is to take long or short positions in oversold or overbought conditions, followed by a divergence between price and the indicator representing the indicator representing the oversold and overbought condition, which in this case is the relative strength index. So I'm going to go through an example of a long trade. Okay, so a buy trade, and just going to click on my little format dialog box here so we can have our inputs, so I can talk you through the inputs as we describe what's happening on the chart. So to start, I want to explain what the different colors mean on a chart. Okay, so the different candles. We have our regular up candles and down candles measured by, so the up candles are colored in green, the down candles are colored in red. Now, the setup indication happens when the Rsi signal crosses below the 30 oversold level. Okay, so this is an Rsi period 14, and all these variables can be changed in your input. Okay, so it's currently a Rsi oversold level of 30. So as soon as that happens, as soon as that condition happens, the candles turn yellow. So these candles occur with a value of an Rsi value of at least 30 or below. The second criteria that we need is a divergence between price and the Rsi signal. So we need price to drop, okay, while the Rsi signal increases. And this divergence can happen within oversold conditions, okay? So in this case, we have divergence between price and Rsi. The candles turn a dark blue color. As soon as that happens, the system triggers a buy stop order, okay, at the level corresponding to where the Rsi signal crossed below that 30 level, and that corresponds with this candle right here. And as you can see, as soon as we hit that level, we open the trade. Okay, so the system opened the trade, and there's another thing that happens automatically, and that is the placement of an initial stop condition. So the initial stop condition is placed at the lowest low of the previous 5 bars. Okay, you can change that parameter in your input. There's this SR lookback period, and it's currently set to 5. Okay, so that relates to the stop level. Now, in order to have a little bit of room between the low and the actual stop, I've added an option to set a certain number of ticks below that low. So in this case, for the $yen, our stop goes 10 pips or 0.001 ticks below that low. And the target is defined by setting a reward to risk factor, and in this case the reward to risk factor is set to 1. So as soon as we enter a trade, the colors of the candles change. They turn green. Okay, so it's a little bit of a dark green versus a lime. And all these colors are configurable. Okay, you can go in here and you can configure all your colors and your targets and your thicknesses, your line thicknesses, and so you can kind of uh, create your own color template here if you want to. But so the important part is that the stop and the reward to risk factor are um, you know, are user configurable. Okay, so it's always going to go off a low, which is defined by this five bar look back period. But we can configure how far from that low we want that stop to be. So that pretty much explains the buy setup. And as you can see, it opened the trade here and it closed the trade up here in profit. There's another option here that you can turn on or off, this enable background color. So if you don't want the candles to be colored, you could enable the background color, and now as you can see, the candles retain their normal lime and red, or green and red, green for up and red for down, colors, but we see the background color change. Okay, and again, the background colors are configurable, and their transparency is also configurable. In fact, I'm just gonna show you how to change transparency. So this open trade, okay, so this defines the background color of an open trade. You can go in here and you can change the transparency through this little slider bar. Okay, so you have a lot of options here. So I just canceled my modification, so I just turned back to having the actual colored candles that are the default. So yeah, they're the default settings, right? So this pretty much explains the buy setup. Let me see if I can find a short setup. This one here, this one was fairly quick, but it kind of does explain the how a short would work. So what we have is, again, we have everything is kind of opposite, right? So we have price, or the RSI signal, moving above the 70 level. As soon as that happens, the candles turn yellow, and as soon as we get a divergence, we get these blue candles. Okay, so the blue candles automatically trigger a buy stop, and the buy stop is placed at the level corresponding to where the RSI crossed above that 70 level. Okay, so we entered this trade at this level here, and we closed at target immediately. And again, here the initial stop went above the highest high, and a few, like 10 pips above that highest high value. Okay, so that pretty much explains the short setup. Let me see if I can find another short setup that wasn't as quick. Let's see here. So there's a couple short setups here. This one stopped out. This one went into profit. Let's see if we can find anything else. There's a long setup here. There we go. This is a good example. So again, we have our standard candles. We have a cross above 70. Candles turn yellow. On this bar, we have divergence between price and the indicator. So price is rising while the indicator is falling, And this is an example of price dropping back below that 70 level, but this here, this candle triggered a buy stop. Okay, as soon as we get that blue candle, we have an order in place, a buy stop, and that buy stop is set at a level that corresponds to the instance where we got a cross. Okay, so in this case, the cross, because we dropped below the 70 period, okay, the cross actually occurred on this candle right here. Maybe this one actually, this one right here. Yep. Yeah, this was the cross. This was the last cross. So the level got breached. The short trade opened and hit our target. So that pretty much explains a short setup. We've gone through how to change the styles. I can go through a few more examples here. We can make the target line, we can turn those into circles if we want. I like to set it to line with breaks. Make sure you do that. If you set it to line, you can kind of see it it connects all the lines and it makes it continuous. You don't want that. You want this option here. And see here, inputs. Yeah, so just to summarize the inputs again, okay, the first three are pretty obvious. Support, resistance, look back period. That relates to how the stop gets placed. Okay, so for a short setup, it will look for the highest high of the last 5 bars, and it will offset that high by 10 pips, okay, or 0.01 ticks for the dollar yen. And so 10 pips above the highest high, that's where the stop goes, and the reward to risk factor is a multiple of that stop distance. So let's actually see what happens if we change that, and as we can see, we get a live update, and now we're shooting for more pips. So I would recommend starting with 1-to-1, see how your strategy does through the strategy tester, and play around, maybe play around with the other inputs and find a combination that gives you enough trades and provides you with a reasonable equity curve. And that is pretty much it.